I guess we can understand to some degree why healthcare was an outperformer this year. They're kind of defensive. The businesses are pretty resilient to economic challenges, and maybe we got some resolution on policy. But how does that carry over into 2019, if it does at all?
Sure, we see a lot of these trends continuing. One of the biggest ones is in government healthcare. Right now, the insurers only have 30 to 40% of the market, going to 50% or greater because they create better health outcomes for less money. So actually a solution for the government, saving them money. And we see that as a big positive trend for names like Centene, Molina, Humana. We also have a couple of special situations like Molina that's early on in a turnaround where we see good potential for a guidance boost, as we think they're running about a year ahead of their turnaround guidance. And on the large cap side, companies like Cigna, who are integrating an acquisition, Express Scripts, where we think that they've set some pretty conservative synergy guidance. So we see a lot of positives on the fundamentals in special situations. And another area that we really look at here is the fact that they are defensive plays. So in a rising interest rate environment, that's actually positive for the insurers. For Centene, it could increase earnings about 2% on a 100 basis point increase in LIBOR. And if you have rising unemployment, Medicaid rolls typically can double their growth rate in a recession. So that could be a real growth driver for names like Centene and Molina.
Are we still going to have at least the potential for a political headline risk around this group, though? Obviously, you have court challenges to Obamacare still out there, as well as, we're going to be ramping up a presidential campaign, this idea of Medicare for all. How does that fit into the outlook for the healthcare providers?
Sure, there's absolutely going to be some overhang related to Texas versus Azar. That could last until 2020 or 2021. The good news is that the stocks perform well when there was times of much more challenging lawsuits going on. There's actually a good precedence of SCOTUS upholding severability. So we think that the overhang on the stocks is going to dissipate through the year, and giving chances for companies like Centene with a sustainable, we think, 20% earnings growth rate trading at just 12 times, a real chance to break out here as investors start to understand that we don't think there's real risk to Medicaid expansion or exchanges going away.
And besides Centene, do you have another pick that you think is positioned very well for next year?
We like United. In uncertain times, there's always a flight to quality. This is a company earning mid-teens earnings growth rate with a top quality management team and balance sheet. We think 2019 is going to be a great year for them to show off their vertical integration, really drive that cost savings and gain market share.